Hello everyone, welcome back to the Midweek Technical Insight. US market had a holiday on Monday as they observed the Memorial Day holiday. Trading resumed on Tuesday and major US indices jumped on news that Donald Trump extended his European Union tariffs deadline to the 9th of July. The 30-stock Dow Jones Index rallied more than 740 points or 1.8% to 42,343 points. The S&P 500 rose 118 points or more than 2% to 5,921 points. Both of these indices ended their 4-day losing streak to start the week on a positive note. The Nasdaq Composite Index advanced 461 points or close to 2.5% as tech stocks rebounded with Tesla up about 7%. Over the US long weekend, US President Donald Trump agreed to extend the 50% tariff deadline for EU to the 9th of July following a request by the European Commission President. Trump said in a social media post that this is a positive event and hope that they will, like the same demand to China, open up the European nations for trade with the US. Markets are now looking past the tariff turmoil for now at least to the 9th of July, even though we still see uncertainty that may cause a slowdown in the second half of the year. Investors may also be looking at the environment post-tariffs into 2026 versus looking at the immediate volatility now. In US economic news, we also saw the US consumer confidence rebounded more than economists' expectations in May, as easing trade tensions between US, China, and EU helped lift consumer sentiments. Confidence improved following the 5 straight months of decline, and the rebound was already visible before the 12th of May US-China trade deal, and this may further gain momentum going forward. Investors are also waiting for the results of Nvidia earnings set to be released after the US market closed tonight on Wednesday, which is the Thursday morning of Singapore time. We will be paying close attention to what the China chip restriction will mean for the AI chip maker, which is still seeing no slowing down in the demand for its graphics processor. We will also be reviewing the minutes from the Federal Reserve May meeting due tonight for insights into how the US central bank policymakers are thinking through monetary policy at this time of greater macroeconomic uncertainty. So far, for broad index S&P 500, we are about 3.7% from the record close of 6,144 points seen on the 19th of February. The broad index is also up 4.4% since the tariff was announced on the 2nd of April. Month to date, the S&P 500 is up 6.3%, and year to date, we are still positive by about 0.3%. Back to Singapore, our STI index started the trading week slightly negative, down about 6 points or 0.18% on Monday as the market lacked guidance from the US holidays. We managed to get a rebound on Tuesday up 20 points or 0.53% following the extension of the deadline for the tariff negotiation with the European Union to 9th of July with the US. And we also saw a boost in China industrial profits up 1.4% year on year, reaching 2.1 trillion yuan for January to April period. This figure marked an acceleration from the 0.8% growth we've seen in the first quarter, suggesting that signs of stabilization following decline in the first 2 months. In Wednesday early morning trade, we saw the STI up about 18 points or 0.49% to 3,915 points. And for the trading week, we are so far up about 0.84%. The top performer on our STI index on Tuesday was technology and defense company ST Engineering, which rose about 2.5% on Tuesday or 19 cents to close at $7.75. In early Wednesday morning trade, ST Engineering prices was flat at $7.75. Our 3 local bank was also up on Tuesday close. DBS was up 0.56%, UOB up 0.57%, and OCBC was up 0.87%. The biggest decliner on Tuesday was business conglomerate Jardine Matheson Holding, down 1.5% on Tuesday or 68 cents to $45.21. And this morning on Wednesday, this slide continued, dropping by another 1.9% or 86 cents to $44.35. For this week's technical analysis, let's take a look at ST Engineering. This Wednesday morning, ST Engineering share price was flat at $7.75 after rallying 2.5% on Tuesday. For the trading week, ST Engineering is up about 2.92%. We earlier covered ST Engineering during the 14th of April period and identified that the immediate support level could come in at the $6.93 level, referencing the high on 20th of March having a change in polarity. 2 weeks on today, ST Engineering share price has risen by more than 10% to $7.75. the share price did not hit the $6.93 support level that we identified and is now trending upwards, tracking the 20-day moving average over here. We noted that ST Engineering share price has largely been on a steady uptrend in 2024, and the uptrend accelerated in the February period of this year. Reviewing the support and resistance level right now, the immediate support could come in at the white line right here, which is the lower bound of the Bollinger Band, now at $7.15. And this will likely be further supported by the 50-day moving average in blue, now at $7.04. For resistance level, the previous resistance level at $7.67, which was the year-to-date high that we saw on 9th of May, has already been broken. And the next resistance level will be the psychological level of the $8 handle. Looking at the indicators, the MACD is likely to turn positive this week, indicating the start of a new uptrend. The RSI reading now at 65 also suggests that the uptrend momentum is likely to continue and will persist further until at least we reach the 70-point mark, which is the RSI overbought level. On the longer term, 15 analysts covering ST Engineering have 8 strong buy calls, 3 buy calls, and 3 hold calls, and 1 sell call. The 12-month average price among them is $8.24, representing a possible 6% upside from here, with the maximum estimate at $9 and the minimum estimate at $6.70. And these are the updates that I have for you this week. If you do find the information useful, do remember to like, share, and subscribe to stay updated with the latest market movement. And I'll see you again next week in the next Technical Insights.